Hi everyone. Today is Monday, February the 17th. My name is Anne-Marie Band and this is the Moneyball Morning Report for the Benzinga Pro platform. We are in a holiday in US markets. It's President's Day, and so I'm just going to go over the futures. But the big thing to look at is we're starting a new week. It's coming into options expiration Friday, and we are breaking out. If we take a look at the E-mini S&P, we've had 4 weeks right up in this range near 61.15. We did close well above that on Friday, and we are beginning the day at the open of the close of Friday, which looks like 61.30 and some change. Yeah, 61.32 is the close. Today's open was 61.38. The low 61.31, so we did come down into the close of that candle, and we are moving up. This looks like a potential breakout pattern. Momentum is a little disconnected, but it looks like a breakout pattern. The thing that might concern me a little bit if I were staring this down, it would be that the Keltner channel above shows a downside twist, and the Keltner channel below shows an upside event, which means buy the dip is still in force. If we take a look at the daily chart, these markets will close, I think, at 1 p.m. Eastern, something like that. Value area high, 61.63 is the top of that zone. What do I like to do? I like to wait for the breakout. Now, on a daily chart, we've got pullbacks showing upside pressure no matter what. So if you don't care about risk, which I would say, hopefully you never say you don't care about risk, but if you don't care about risk, you can go long and see where this heads. For me, I would like to see if we could come back into that breakaway ledge at 61.11. Intraday, that number for the go, no-go looks like, from a tight action perspective, it looks like 61.33, right? It's that opening candle formation. What is the high of that? 61.38, the low 61.30. So intraday, that might be the region that we want to stare down. As long as we hold the low of the opening candlestick, we'll have ourselves upside pressure. But for me, I would rather wait to see if we can test one of these averages to go long. All right, let's take a look at the NQ. Going to start at the weeklies. Same sort of breakout formation, 22,150. We're well above that. That might be the go, no-go line today. And the deeper edge, 21,889. That's my thought anyway. 21,889. Looking for that support zone. That might actually be the better no-go line, to be honest. If we were using a Gann number, we would see that about 50% of this candlestick is 21,803. So if it loses 21,900 here on the NASDAQ, we would expect it to come down to 21,800 and then start battling with the traders there. You can see this is clearly buy the dip, but I do not like buying the breakouts here. It just does not look very clean, because they do often retrace each other, even though they end up moving bullish. I have no idea what kind of risk we might come into. The breakout happened 3 days ago. We're continuing to climb out of the breakout formation. I still like 21,803 as a very key level, but 22,131 could easily be our go, no-go line today. Let's go down to the 1 hour chart and see what's happening. This is a little bit toppy. Price action showing highs around 22,276. We've put in our first lower high But we're still holding support, and that support is 22,230. Momentum is down, so it tells us that they are looking for areas to buy. You know, maybe it's the next level of congestion down here at 22,188. I still suspect that that 22,131 ends up being the go, no-go line. It could be that traders come in at 22,150 and 22,130 ends up being the stop. Further upside, we've got 22,300. Let's see what Venther Q is telling us on these formations. These are very low. I would say 22,000, it looks like 22,300 and 22,250 end up being those lines in the sand. So notice this is a fight club right here at 250 to 300, and then there's even more at 22,400. Traders continue to position their option chains to the north. It's very, very interesting. So dips are still buys, even if they are dramatic. Just wait for them to come to you. That's how trade gets facilitated in the market, by coming to where you want it to be. And if it doesn't come to you, so what? Next time around, you pick another setup and it works for you. Notice this 44,400 area held very nicely. I believe it is the go, no-go line again today. Notice the price compression. 3 weeks ago, we made a candlestick with a high of 45,206 and a low of 44,000, what is that low? 43,965. And we've stayed in there. So there is price compression here. What is this V formation telling us? That we clearly have sellers above us. But if the buyers can close the days above this 44,700, they're going to make the sellers very nervous, and then those sellers are going to want to cover. Is that what's happening at this time? No. What's happening at this time on the daily chart is a high, a retest of that high that fails, a low, and then a higher low, and then another lower high. So we have price compression. It's still by the dip. I still like the area around 44,000 for a solid trade, but intraday, the go, no-go line is very likely to be 44,400. Now, you can also see that Thursday's closing VWAP and the opening range of the candlestick puts us at 44,600. So it could be that we never get to 44,300 and we stay within the range of 44,600 as our floor of support. Notice here's a low, here's a lower low that immediately recovers, a break to resistance, and then a pullback that gives us a higher low. This is a look below and fail that holds a floor, and now we've got the bounce. So where do we expect that bounce to go? 44,700. At which point, it's probably going to break down again, all right? Because this is very cross-current in general. We have lower highs, lower lows, and then a bounce into resistance. So that's what I am looking for. Micro Bitcoin. This one moved quite a bit over last week. Pretty well, not really, as I look at it here. This wick from 3 weeks ago is still where we're stuck, with the low at 91,500 and the high at 103. Now, I did mention last week, hey, listen, if we got to 100,000, probably some sellers up there, and there certainly were. From a daily perspective, however, we're we're still stuck in the mud, right? It did have itself a pretty good go on Friday, but it is just not holding its purchase. It just clamps and then it can't hold back down here into the floor. This whole chart looks fairly unstable to me. I could see Bitcoin having a bit of a problem here. So what are we looking at? We've got moving average crossovers. We have momentum that's a little flat. Bounces are still sell zones into the 100,000 area. That's where I would say for the go, no go, if you want to trade in this garbage. Notice what happened at the opening tick. The high of the opening tick, 97,385. That, well, and a gap down. So let's look at the close of the gap, 97,559. And the low of the pre-market, that we might use at the stop, 95,900. As long as we hold above 96,155, there's a bounce zone here. But if we lose it, it's got to immediately recapture on that hourly candlestick, or there's trouble ahead. All right, so the go, no go line for upside pressure, 96,155 for Bitcoin into maybe 97,300. That's all I would see here. That is a very messy chart. Let's look at oil. All right, oil back down at 70.30. Let's go to the weekly chart. Listen, no matter how much bad news comes out of Iran, whatever, this, I do not see what the oil traders are seeing here in terms of why there's a pervasive ask, right? The traders keep selling these highs anytime they can get a bounce. I'm fairly sure that should change in the near term. Here's what we're looking at. This 70 floor, pretty important. So holding 70, and I would say 70.20 is going to be very key for this chart in the near term. And every bounce, folks, has been sold. So the moment that formation changes, we know we have to do something else. Right now, though, any bounce into 74, 72.80 first, and anywhere in between, those are sell zones. Absolutely. Is this a buy zone potentially? Maybe. Right? But we have a bottoming formation, but slope tells us that the bounces are going to sell in large part, right? They might wick out. We might have some tremendous news that shoves us up. First pass, going to be a sell zone. So if you want to buy off this bottom, I would say wait for that 70.30. If you condition yourself and say, hey, all right, I'm going to get in, don't give yourself any more than 20 cents of a stop. Because if it loses this 70, it's very likely to head back into 68.50. It's just a chart that is very, what's the word? Precariously balanced. All right, definitely double bottoming. We can see it. But those double bottoms, when trend is down, first place it's going to bounce is into old support. And that's exactly what it did at 71.21. So the go, no-go line, 70.20. If it breaks that line, it needs to immediately recover, or we don't think about longs anymore. Let's go to gold. Right? Intraday looks very different to the weekly formations, right? Because these things are, this is rock star stuff in terms of its move. But notice this wave. This is the wave that I drew. High to low, and look at where it came right into. The 1 0.618. Almost on the nose, folks. Almost on the nose. So what does that tell us? It tells us that this is an algorithmic trade. This is a trade that says, hey, listen, we got into this area and now we're going to pull back. So the question is, what do we need to hold to continue sharp upside pressure? Or do we head back down into frontline support? You all know that I would love to see anywhere from 28.46 all the way down to 27.90 as a floor of support, right? Would love to see a rotation that came back into these moving averages, held us. I don't know if the charts are going to give that to us, right? I think they are. But I don't know for sure. Let me remove that. Oh, yeah. All right, so now we are looking at a real reversal. I mean, savage. We're bouncing off of 28.85. We know that number's important. What do we need to get past today to tell us that we're likely to head back to the top of that candlestick? My thought is 29.27. If we cannot breach this zone at 29.27 today, we head to 28.46, right? 28.85, that's the go, no-go line here for gold in my mind. Absolutely. Let's go to the 1 hour chart and see what the traders are telling us. I'm going to delete this fib. And then we can see we're right in the middle of value area high and value area low. We came up into 29.18, can't hold it, but we're holding the VWAP. And we've got flat to slightly down moving averages. That's a coin toss in my mind. I would like to see it come back and retest. Take a look at that opening tick. Let's remove this one and move 28.85 up to 28.87. That's probably where we're headed in my mind, right? Here is a high. Let's see if the floor holds or it breaks just like it did here. And then we bounce into a lower high. That will confirm the downside trend on the 1 hour chart, or at least the fade back into frontline support. Okay, so that's it for me, folks. I'll see you on the streams. Be careful. Volume is going to make today very messy if you trade futures on the half day.